Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is January 10th, 2019. A lot of volatility as of late with crude oil, so I thought I would take a look at that. Short, intermediate, and long-term trends all point to the downside. The technical rating is pointed in the opposite direction. It's very positive, but we have a couple of different alerts that have popped up here. One is a shorter-term overbought type condition, which is what the elastic level is, so it's got a pivot high that is formed today. We also have a hump indicator, which is based on the power level. I'll explain what that is in a second. And then we have a major support gap that is formed here in crude oil, in part because we've had such a major thrust to the market. If we take a look at the pro alerts, here's crude oil right through here. Just recently we had a surge low. These are weekly bars, so this was a week ago that we had a low taking some profits on the short side, and with the bounce that we've had, that certainly has turned out pretty well. It didn't catch the exact bottom, but it did catch at least a portion of the bottom. If we take a look at the market itself, this being crude oil, here is crude oil, and we're now butting up against the 50-day moving average. And the reason I'm showing this to you, if we can kind of zoom out here a little bit, it might be a little more pronounced. Oops, that's probably too much. But it's basically formed what I'll term as a V bottom. Here's a major downtrend in the daily bars, and then very rarely do you get a perfect V where it comes down and then completely does the about face. It never had an opportunity to really kind of base a little bit, and because of that, the fact that it's in overbought territory according to the elastic level, and that's what this indicator is right through here, it's telling me that it's gotten ahead of itself, and it's going to probably have a little problem with this moving average here. And the best thing that can happen is that it sticks with this support level right through here, weak as it is, but stays above that level. That level is probably the same thing that a lot of people are looking at. It's 50.35, so it's basically 50. As long as we can stay above that level, then we should be good. But it does have to really start to base here and really get away from this V-ish bottom, thrust to the downside, thrust to the upside. It just hasn't formed anything, and because of that, if we should break that level right there, there's not a lot of support to the market going back to this lower level right through here, which is at 42.42. So what that means is that there's a little bit of risk here in this particular market until we actually get some type of a base formation. But the good side is this. If we come back to the website, well, let me just show this to you real quick because I've got it all set. That support gap, you can see there's huge support gap in natural gas, so it's kind of skewing things a little bit here. But here's crude oil, 3.8%, so it's far and away much lower than that of what's going on with natural gas, but it still is pretty high in comparison to some of the other markets, almost 4%. So what that's telling you is that because of that V-ish thrust to the market, it just hasn't had an opportunity to really stabilize here. So anytime you have a market that is on the lower side here, and there's not really a lot of support to the market, there's a gap in the support, the market can fall. Now, I also want to point out that we're probably at the tail end here. Here is a seasonal chart for crude oil, 10-year. This is what the chart looks like. You can hardly see it here, but there's a little black triangle. That represents today's action, technically last evening's action. But it's coming to a bottom as far as the seasonal charts go. There'll be another thrust to the downside here in mid-February. But when we get to this thrust just in a couple of days, that will be the formation, and then despite some sell-offs along the way, the trend, the seasonal trend, will be to the upside up until May. We addressed this a little bit in our seasonal newsletter, so just bear in mind that I believe that once we base a little bit, then we'll have hopefully an opportunity for crude oil to really establish itself, get the wind in its sails, and we'll start to see probably a little seasonal pop to the market. But it's still looking for a little more downside, maybe a little consolidation is what I'm really referring to. And then from that side, we'll see how things kind of play out. For right now, when we look at our systems, we're basically hedged. We got a long, got a short, and a short. So we got two systems that are long, two systems that are short. So there's a little bit of ambiguity. I had a question on my Twitter feed earlier today. Why in the world would you be hedged a market with two different, different contracts, too long, too short, two contract units, if you will? And the reason for that is that the systems, based on their time frames, are looking at different conditions. And so they're pattern-based systems, there's trend-based systems, there's swing-based systems, and then we have different time frames. Here's a 60, here's a daily, another daily, and a weekly. But there's also a 45 that's not trading, a 240. Point is that they're looking at their time frame under their condition with their trading style, and there can be times when the market is looking to hedge and protect itself. Now, I mentioned that we have a hump phase, and what that refers to is here is the trend to the downside, then there's a little bit of a pop. Well, there's an opportunity to make money on the long side with this pop, but it still has a downward bias trend to the market. And so we don't get a lot of these things, but here's the dot on the power level, and what that represents is that we've gotten overbought in a bearish trend. Now, I just mentioned the seasonal charts are going to have a bullish bias to them, but if you're stopping and just simply looking at this chart, not looking forward with the seasonal charts, all you see is a downward trend, and you see the market has gotten ahead of itself, too far ahead of itself, hence the reason the elastic level is overbought. And in that condition, we're looking at a market where it's gotten ahead of itself. We call it a hump market because it's probably going to stop and do a reversal, and what it's looking for is a continuation of the trend. Now, the seasonals, I think, will take precedence. That's why I started with that. But when we come back to the systems, there's a real reason why we would be hedged here, because there's a lot going on. Is the trend going to continue or is it not? Are the seasonal charts going to start to take into account, and we have a legitimate reversal once we get this basing? So there's absolutely no reason why. I'm surprised that people would even ask the question, quite honestly, but there's absolutely no reason why the systems wouldn't be hedged, because we've got long systems and short systems, different time frames. They're fighting against one another, or they're basically looking at their set conditions, and because of that, this is the strength to these types of trading systems, is that they work with each other to form a protective mode where we're hedged, and we're just simply waiting for the market to tell us what does it really want to do. Is the trend and this hump phase going to take over, and the market's going to reverse, and that support gap is going to be broken, and we'll go down and retest new lows? Or are we going to base here, have the market consolidate for a little bit, and let the seasonal tendencies start to take into a case, and have the market head higher? The systems and myself, I don't know exactly what's going to take place, but I do know that the systems are smart enough to protect themselves. They are hedged at this particular point, and we'll have to see how things kind of play out. So with all of this analysis, with all of these deep dives and all these different indicators and the support gaps and the seasonal charts, all one needs to do is just simply look at the systems, because they, with no emotion, are going to dictate what's going to take place. Eventually, what will happen is that we'll probably base here eventually, and we'll get rid of these shorts and start to establish some more longs. That's what will most likely take place. But for right now, there's enough ambiguity that they just simply want to be hedged. So I'll get off my soapbox, but that is what is taking place with the systems right now. And the reason that we have all of these different systems is in cases like this, when the market could go either way, the systems are smart enough to protect themselves, and that's why we're hedged. So with that, we will take a look at some more markets soon enough. Thanks for watching, and we'll go from there. Bye-bye.